5 months ago, I started paying £200 a month into UK dividend stocks, starting from nothing. For 4 of those months, only one company had ever paid me a penny. On the 31st of July, a second one did, from a company you might not expect. And in the same few days, 2 numbers I've been watching since April quietly pushed past milestones of their own. I'll show you the whole portfolio at today's prices, both of those numbers, and the 6th stock I've just bought. But first, what does £1,000 actually get you? 5 months in? 5 months, £1,000 in. Here's what it's built so far. 5 stocks, and, as it stands today, a portfolio worth a bit more than the cash I've paid in, before a single dividend is counted. Legal and General, bought on day 1, is still my biggest earner. The newest holding, National Grid, has barely moved, which, for the boring utility I bought on purpose last month, is exactly the point. And the income the whole thing is on track to pay has climbed again. Not from nothing this time, from something real. Quick one before we carry on. This is not financial advice. I'm just documenting my own investing journey. Always do your own research before you put money in. And if you're new here, every month I put £200 into UK dividend-paying stocks inside a tax-free account, and I track every single pound of it out in the open. This is month 5. Now, the part that made this month feel different. The second company is B&M, the discount retailer. On the 31st of July, it paid its final dividend for the year, 6.1 pence a share. On my 58 shares, that's about £3.50. Small on its own, but here's why it matters more than the amount. Every dividend I'd been paid until now came from a single company. Now it comes from 2, in completely different corners of the market. The income has started to spread out. And it tipped something over a line I've been waiting for. Add that £3.50 to what had already come in, and the total dividends I've received since I started have crossed into double figures for the first time. From nothing in April to over £10 paid to me simply for owning shares. It's still a tiny number, but it's a tiny number that now grows on its own, because every payment buys more shares and more shares pay more dividends. That's the snowball, and it's turning. One quick thing before the buy. If you want to follow this properly, a real UK dividend portfolio built month by month from zero, the best thing you can do is subscribe and come along. You won't miss an update, and it genuinely helps the channel keep going. Right, this month's decision. So, the buy. And that meant being honest about the shape of what I own. When I look at my 5 stocks, more than a third of my money still sits in 2 insurers. 2 companies that move on the same things. National Grid added a utility last month, and B&M gives me a bit of the high street. But finance still carries more of this portfolio than anything else. This month, I wasn't looking to double down on what's already working. I was looking for the biggest hole in the portfolio. And when I lined it all up, one gap stood out more than any other. I don't own a single energy company. So, month 5 is the month I diversify deliberately into energy. The company I went with is Shell. 6 shares, a little under £200, paid for by my usual £200 a month, and the change left over from last month. And here's the thinking, both sides. An energy major doesn't move with my insurers or the high street. Its fortunes ride the oil price, not interest rates, not how much people are spending. So in the months my financial struggle, this one shouldn't. That's the whole point of it, not more yield, but a different engine underneath the portfolio. 2 months running now, I've passed on the bigger headline number and bought the thing that balances the portfolio instead. I'm starting to think that's just how I invest. The honest catch is that the same oil price cuts both ways. Energy earnings swing far harder than a utilities, and this one's dividend history has a real scar in it. In 2020, Shell cut its dividend for the first time since the Second World War. It's grown every year since, but it's still not back to where it was. So I'm not pretending it's a safe little income machine, but for what my portfolio was missing, it's a strong fit. And unlike National Grid last month, this one pays me quickly. Back then, I bought in and waited until the new year for a single penny. Shell goes ex-dividend in August and the money arrives in September. So here's where month 5 leaves things. 6 stocks across 4 very different sectors. Finance, a utility, the high street, and now energy. £1,000 paid in and a forward income that's climbed again. You can see it there on the screen, higher than last month. But the number I keep coming back to isn't the value or the yield. It's this. In 5 months from a completely standing start, I've gone from no income at all to being paid by more than one company in more than one part of the market, and the running total has ticked into double figures. That's not a lot of money yet. It's the proof that the thing actually works, and the paydays are only getting closer together. Between now and my next monthly update, the calendar is already filling up. BATS pays its quarterly in August or September, Shell pays on the 21st of September, and Legal & General pays its interim on the 26th of September. The biggest of them, on shares I've been adding to since April. 3 payments from 3 different companies inside about 6 weeks. Here's the honest part though. The next full update isn't next week. It's October, and that one's 6 months in. Half a year of this, start to finish, in one place. Between now and then, I'll be digging into individual stocks, not counting deposits. But the income, that just keeps arriving now, every few weeks, whether I'm watching or not. If you want to follow this all the way to a proper income, subscribe. It genuinely helps. And tell me below, would you have gone into energy or filled the gap somewhere else? Until next time, happy investing.